Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. So, have you noticed that a lot of the Yieldmax YouTube channels are now bringing up QDTE and how they are now moving over to it? Um, I I have, and I don't blame them. So, basically, a few things are happening here. One, we did have the market correction in early August, and now people are reevaluating what they're invested in. And also, QDTE is very, very new. It only launched in March of this year. So now that there's been a few months and people have been looking out at it, people are now making informed decisions on how they want to invest. So let's introduce what Roundhill is and what these are. They are zero DTE covered call strategies, which means there is 0 days to expiration, and that means that the cover call expires on the same day, so they're able to capture some of the upside potential in the morning markets before they implement the covered call. So when I was looking in June, and I'm just lucky that it existed, I went into Yahoo Finance into the historical data, and it was pretty easy to say, like, okay, these are probably bad examples. So, like, go down to May. Let me say this was at 44.61 at open. When was I able to get, okay, so like halfway through, it was at 44.75. So if you got in before the expiration date here, it would have price recovered halfway through, at least. And 44 here, and it price recovered halfway through. Or actually before that. So, like, it was showing a trend in June that when things are going generally well, it will recover, and that's mostly because of the zero DTE strategy, because this is not the only cover call strategy that's out there, and there were less options before this, and there will be more options in the future, but you can only use the information that's available at the time to make the best decisions for you at the time. So that's why a lot of people are shying a little bit away from Yieldmax now, and they weren't lying to you or trying to trick you. It's just that given the pullback, people, and the fact that this fund has more of a history now, people are feeling more comfortable investing in this. And, like, no joke, like, this, all of these, all the way up to, like, I think AYII, like, Misty was barely, it was only yeah, so this has been around for 2 months longer than QDTE. I think Yieldmax maybe came out at the same time. So it's a month older than. So I like, you can't blame people for getting to Yieldmax and YMAG because it existed for longer. So Misty's younger by a month. So, like, QDTE was only around for 1 month. That's not enough historical data to figure out if you want to do it or not. The thing about this, though, is it was apparent in June that even in June that if you invest in an index fund, that's always going to be the better long-term investment than a single stock ETF. And it's just because if a single stock in an index fund goes away, like that company goes bankrupt, you only have a limited exposure to that particular business. And, no offense, but if the NASDAQ 100, if every single business goes out of business at the same time, there's probably more problems in the world than like your particular portfolio. But like if you do Misty and MicroStrategies goes out as a business, then you're SOL. So QDTE has always been the better investment. The thing I don't like about people that are now covering this ETF is that they say, oh, there's a 67.4% distribution, which is what they're showing on their website. However, I don't believe this is typical. This is because there's been a higher than usual volatility. So I just don't want people to invest in QDTE and expect a 65% yield all the time. I would expect, and when I was doing it, about a 30% yield. But in general, it's better to earn a 30% yield on something where the price is generally appreciating than to earn an 80% yield on something that's always consistently paying 80%, but the price of the stock goes down. That's called a dividend trap. So the thing when I was evaluating Yieldmax, like take Misty for example, I was looking, and basically what I want is Yieldmax has shown that it's capable of paying over 100%. So I want it to be about $2 per share a month. So, and I might not always get what I want. I didn't get what I wanted this month. Nobody got what they wanted this month. But like, in general, when times are good, I would want $2, and no matter what the price of each stock is. If it's more, it's good. If it's less, then I need to evaluate what my expectations are for this, because single stock ETFs, you have to do way more research. And Misty and MSTR are basically a Bitcoin play, and you have to understand the cycle of Bitcoin, which means we have a few more months of it being a good bull run, but then pretty soon here we're going to have a crypto winter, and nobody knows how Yieldmax and Misty are going to behave for the 2 years of crypto winter until people wake up and say, oh yeah, halving is happening again. So Roundhill has 2 of these funds right now, and a third one coming on the way. The XDTE is for the S&P 500. It is more stable and has less volatility, so the yield is generally lower than QDTE, which is why I gravitated towards QDTE. The other and more gimmicky thing about this is that it pays every single week. And while there is a benefit for distributions being paid more often, it is a diminishing benefit. And so that wasn't as big in my evaluation as, does the stock recover its price between distributions? But I do like for the weekly that it helps with my dividend wheel strategy, which I think some people call a modified dividend capture strategy. But basically, what I'm doing is the last week of April. What month is it even? Okay, July. I put $3.51 into AMZY. because that was a distribution I got from QDTE. And then I got paid $9.47 from AMZY, which I paid into QDTE. And then Yieldmax, I paid $5.14. I got, did I record? But yeah, I got $29.50 from Yieldmax. That goes back into QDTE. And then I didn't have a third one I wanted to do because these are all paying around 30 to 40, 60%. They're not 100% like Misty and Navidi. So anyway, I put $5 back into QDTE this time. And then next week I'll put it into YBTC. And then we will start this process over again. I think there might be 5 weeks in August, so I might do QDTE again one more time. But this way, my distribution from AMZY is getting distributions more than once this month, and for Yieldmax and QDTE and YBTC. And so you can just choose for ETFs that you want to build up and then have those dividends earn dividends. And like I said before, the distributions, there's a diminishing return about the benefit of this, but it will be a benefit and you will relatively build up your position quicker. I did do doodles, and when RDTE comes out, I will probably build up QQI, AIPI, and just do basically FEPI and AIPI. But for XDTE, I would probably do JEPI, TLTW, SFOL, and SPY-T. Basically, XDTE would be all of the things that make sense for long-term investing that will help your portfolio, the NAV, not to drop too much so that you don't get your margin call. So I really do love QDTE. I am invested in it. I think that index funds are better in the long term for actually investing. The only reason I'm still in Yieldmax and I'm not changing my tactics at all is because I want to get to $3,000 a month as quickly as possible. And I know the market doesn't care what I want, but I want to put myself in a position so that I can earn $3,000 a month through distributions more quickly. And what I'm doing is complicated, but I don't think for any of these that we should be dripping 100%. We should be taking a portion and putting it somewhere else, whether it's in just VU or it's in another high yield, high income ETF, whatever it is. Protect yourself, because if Yieldmax goes away tomorrow, I'm not saying it is, but if it does, and I had put 100% of my reinvested 100% every time, I wouldn't have anything to show for it. But if I had put 30% into VU, and then VU shoots up a lot, or it just does the steady 10% a year, if Misty goes away, and I've gotten all of my money back through distributions already, then at least I have what I invested in VU to show for it. So, I also get the argument, and the reason why I would probably get more into RDTE and XDTE, this is the mid-cap one they're doing, and this is the S&P 500, is if I get more into margin and I take out a bigger percent of margin, I then have to be more careful about my diversification so that my portfolio doesn't drop, so that I don't get margin called. So there are reasons why people are switching from Yieldmax to QDTE. It's nothing nefarious. It's just that it's very new. We are dealing with new information. Both, historically, it's only been open since March, but also because of the correction in August, they gave us a better picture of how these funds will react to a downturn in the market. So, all of this was just for entertainment. It was not investment advice. And I know that it's very, very, very enticing. I'm sucked in. Like a 98.75% yield. Sign me up. And if you go into like Misty and you look at the historical data, all of these, they started at $20 at inception. So, I mean, it was barely $20 at the beginning, and then it was $25. It was $45 at one point. So we know Misty can get up there. I didn't get that high. I'm just not that enthusiastic about paying that much in any of these ETFs, but like I was paying, I think I paid $28.29, and then I was happy for the little bit of a drop to 26 and 25. I bought in here, and then there was the big dip, and now we're at 22 again. But the entire market dropped. This isn't Yieldmax. It's not NAV erosion. It's just that it was 40. Bitcoin did its thing. The market went down, and now you just have to wait for it to recover the price. So I believe in Misty. I believe in Bitcoin. But I understand that we need to have more stable things around in my portfolio so that I don't get margin called and so that I'm not sad and I can sleep at night. So everybody has to have their own investment strategy and their risk profile, and like how much do you want to just do 5% Misty, 95% QDTE? It's up to you, but yeah, QDTE is a good option, one of the better options for the high income, and you compare it with, it's not winner takes all. You should probably, or I guess I would say, like, my philosophy is even though it feels better and more powerful to just really beef up one position and just get a bunch from one position, diversifying the funds and the fund managers and all of that stuff, diversifying yourself in that way is helpful as well, just to get your own risk profile down. So anyways, thank you for listening if you've gotten this far. If you could subscribe, tell me what your theory is with QDTE. Do you like it? Will you be investing in it? And I will see you all later. Bye.